What are the chances that the Constitution gets changed to have a referendum on euro? I guess this is the big fear that the markets actually fell out of bed because of last Tuesday.
Well, the coalition has signaled that this is not one of its plans, so it's backtracked from that plan to have euro membership as one of the issues it will raise. So let's hope it stays that way.
Okay, how should markets view this? It seems that, we were ready to do a coalition of two populist governments or, leaders, and the market were fine. And then as soon as, the euro was mentioned because Paulo Savona was blocked from the finance ministry, that's when there was kind of widespread panic.
Well, look, so I think there are a couple of things that investors should be watching. So first is the rating agencies, right, which are operating completely out of any sort of European Union government function. They are independent, but they have, Moody's has already put the rating on a watch negative. The other agencies have yet to fully opine, but I'm sure that were that sort of measure to be introduced, they would have a view on it. The second question is, does this influence how the European Union faces Britain in the Brexit talks?
And it must, right, at the margins.
You would think so. You would think at some level. Does that mean that kind of softer outcomes are more difficult? Because if it looks like kind of there are fewer consequences of leaving the euro, then does that raise the risk of other countries wanting to push for it? And who knows how it will ultimately come out. But I think at the back of people's minds, I think that issue has to be there, and is another kind of live issue that we're facing this month.
Yeah. Do you think it's impacting Brexit?
I think it is a valid point that the European Union now has a stronger incentive to be tougher on the UK because it wants to disincentivize the anti-euro parts of the Italian government from going in that direction. I think a third factor I would add would be how the ECB reacts to this, because we are also looking to the ECB gradually exiting its QE program. We've seen very strong signals in that direction. And will tensions in Italy or a fragile government in Italy cause it to reconsider? Because it is a big economy in the context of the euro area.
Yeah, and Andrew, actually, we charted the spread between Spanish and Italian 10-year yields. And you can see the spread widening over a couple of days and then, retracing a touch. But what does this mean for ECB policy?
Well, look, I think this tells you that there is still a lot of uncertainty that's in the bond market. So even as other equity markets have healed and feel better, and we see equities in the green again today, really globally, this is an issue where there is still, I think, bond markets are telling you that there's still a reasonable level of uncertainty out there about how this will play out. And, again, as just mentioned, this also is a difficult situation for the ECB because, one, they've already flagged that they want to be pulling back from market support as this kind of new uncertainty has introduced itself. And then some of the measures that have been proposed by the government, if taken kind of in total, could kind of violate some of the bounds that the ECB has set are important for bond buying. So, again, it's quite a bit of uncertainty. And again, I think the spreads are telling you that this is far from over.